Hey everyone, how you doing today? It's Shankar Pirai, mortgage agent from Matt Bancorp, and today we're going to talk about looking for a mortgage. So let's dive right into this topic. So when looking for the correct mortgage for yourself, there's a lot of things you got to think about beforehand before you actually even go and look for that mortgage. What type of property are you going to be purchasing? The type of property you're going to be purchasing does matter when you're looking for a mortgage. What's the use of that property? If you're purchasing a rental property, you got to think about, when am I going to refinance? Is this a flip? How's my cash flow looking on this investment? So I always recommend, if you're purchasing a rental property, you should get a variable mortgage. The reason being is that the interest will be lower, so it will help with your cash flow, as well as that if you need to refinance or you need to sell that property, the cost to break that mortgage is a lot lower. It is only 3 months interest penalty, where if you get a fixed mortgage, it will cost a lot more. Tip number two when looking for a mortgage is do not go and get discounted mortgages. When you get discounted mortgages, it may look good up front as you're getting an extremely low interest rate, but there are serious penalties that can eat up into your equity. And if you need to sell before the term is done, then it's going to cost you a lot. So do not go for the discounted mortgages, as it may look good at the beginning, but the cost to actually sell or to move your mortgage somewhere else, it is a great cost. So while you might be getting a very low rate, 0.99, 1.1 at the beginning, you're locked in. You won't really be able to go anywhere unless you want to sacrifice the equity you have built up in that time that you've held the mortgage and your property for. Tip number three is, when getting fixed rate mortgages, do not go into the bank to get a mortgage. What you should do, consult your mortgage agent, is that you should go to institutions that actually specialize in lending money, because they'll be more competitive, as well as their fees and penalties will be a lot lower, because all they do and specialize in is lending money. As well as a lot of institutions that are outside of the banks, they offer warranties, 1 year warranty, some of them up to $10,000. If anything breaks in that house, anything breaks in the house that you bought for the first year under 10,000, they will cover the cost for you. So if you have a water cooler or a fridge or something that breaks, they will cover that cost. So I would recommend going to an institution that specializes in only lending to go and get your fixed rate mortgage. Tip number five is consult a mortgage agent when you are going to get your mortgage. When you're getting your mortgage, there is so much paperwork that you have to go through, and having someone there that's an expert and they do this 24/7 can really help and calm your nerves as you're trying to purchase. Not only that, when you are looking for a property, if you're working with a really good mortgage agent, they will be on call with you to make sure that you can still afford the property that you're going to be purchasing. Because sometimes you may be qualified for a property that's 500,000, but the property taxes was 2,000, and then you go to another property that's 500,000, but the property taxes is 3,000. You may not qualify for that property if the taxes is an extra $1,000. So always consult a mortgage agent, and it's always good to have them on your team, so as things change, you can call them right away, no delay, and they'll get an answer for you. Tip number six is, after you've received your mortgage, is review your mortgage quarterly, every 6 months, yearly, to see what is in the market. Sometimes interest rates have lowered, and you'll be able to maybe get a better rate or work something out with the lender. So talk to your mortgage agent every 6 months to a year to see if there's anything that can be done. Most of the time, if you already have a mortgage for a term, a lot of times you can't really change the rate or anything, but you never know. So always review your mortgage every 6 months to see if you can get a better rate in the market, because it will save you money in the long run. Thank you for watching. Please follow and subscribe to get more information on mortgages, real estate, and how to build your wealth in this economy.